We're seeing the Naira still floundering against the dollar, closing at 163.14 to the dollar. Now, at this point, are we going to see a stable Naira at all, David? Some analysts are saying that all bets are off now that we're seeing oil prices sliding. What's your take on this?
Well, the CBN's guidance is if oil prices fall below $80 a barrel, then all bets are off. But as at yesterday, oil prices were around $90. That's Brent crude, and so far, obviously, we're seeing the markets preempting that, the markets or foreign portfolio managers getting out of the market. We really do think, or I do think that the CBN is going to maintain the 160 plus or minus 3% corridor, because if you look at the fundamentals driving FX, you would realize that the external debt to our foreign reserves is somewhere around 17%. Imports cover is somewhere around 8 times, 8 months, which 8 times, which is actually pretty good. So I would like to think that the fundamentals are still sound. However, what's driving the markets in the interbank market are foreign portfolio managers either trying to exit early or cut their losses, or some even trying to take bets against the Naira. However, I think the CBN is poised to keep a stable Naira for the time being.
Now, you do say, David, that you think the CBN is poised to keep a stable Naira. What are your thoughts on analysts who say they expect the CBN to adjust the midpoint of the exchange rate band upwards towards, of course, in the second half of 2012, towards quarter 3 and 4? What is your take on that?
Well, from our reading of CBN policy, I don't think that's on the cards just yet. I do believe, however, that the CBN will keep a keen eye on maintaining price stability. If the CBN then moves exchange rate again, if you remember they did move once, then it would simply just be a managed float, and then simply investors would then bet against the Naira to its fundamental levels, and it could signal a CBN that is unable to keep its word or keep a stable Naira, and then you might see import-driven inflation. I don't think making such arguments for moving the Naira band again is the right way to go at this juncture.
Okay, well, David, let's talk about oil prices. I mean, oil prices, we know, continue to slide. What effects, give me a better picture of the effects you think this will have on our foreign reserves and, of course, inflation going forward?
With regards to oil price, the drivers of oil price remain the happenings in the global space. Global growth was downgraded once from 3% to about 2.5%. It looks like it's going to be downgraded even one more time. And the drivers of that obviously remain the European crisis, remain China having weaker than forecasted growth, India also having weaker than forecasted growth, and those economies are now having to be propped up. Obviously that has a direct effect on oil prices because you're seeing lower demand for crude oil. However, in as much as production in Nigeria remains stable, we expect it to remain stable. However, the lower oil prices will certainly have an effect on the accretion into the foreign exchange reserves. The accretion into the foreign exchange reserves actually has a lagged flow through from oil price movements, somewhere between 3 to 9 months. You will probably find that in 2009, when oil prices came down.
David, unfortunately, we've run out of time.
Oh, sorry.
Of course, we'll be talking more about this later during the course of the day. But thank you so much for joining us, David Alao, an analyst with Stanbic IBTC Management. It's back to you in the studio, Mashudu.